Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, January 9th, 2013. And in this video, I'd like to do an overview of the aerospace and defense sector and some of the key stocks within that sector who stand out as potential trading and investment opportunities. This is a very diversified sector. You have companies with the likes of Boeing, for example, who make commercial jets. General Dynamics, they do a lot of military aircrafts, munitions, things of that nature, all the way down to personal defense companies such as Smith & Wesson, Ruger, you have TASER in there, so a lot of different companies. And what prompted me to take a look at this sector is I do take a top-down approach to the market, looking at first the overall major stock indices to formulate, my longer-term bearish or bullish views, and then I like to drill down amongst the various sectors, looking at the most bullish or bearish charts there, and then drill down within each sector and look at the components. So I have gone through this sector, aerospace and defense, looked at each and every stock within that sector, and there's about a dozen or so I want to look at the charts here. So we'll go ahead and dive into those charts, and before we do, let's quickly take a look at the sector. What I've been looking at over the last week or so, although I still have my concerns on the market, there has been a lot of damage done to the bearish case, and I will talk a little bit more on the broader markets in another video here soon, as well as some charts on the site. But a lot has changed in the last few weeks since I went on my quasi vacation. I was, home throughout most of the vacation, spending a lot of time with my family, pretty much disengaged from the markets. But I will say the strength in the markets had caught me by surprise. So I'm looking at charts here, trying to add some new trade ideas to the site, both on the short side, but particularly on the long side. So that's what brought me to this sector. As you can look at this, as we can see from this chart here, we're looking at a weekly view of the sector, and it looks to have broken out of a very nice ascending triangle pattern. Ascending triangle is a triangle with a flat or horizontal upper line in an upsloping downtrend line, and that's inherently a bullish pattern, and we have had a breakout. So that is what brought me into this sector. So I'll share my thoughts on these stocks and where we might go from here. Now, in looking at this weekly chart, like so many other longer-term charts, the thorn in the side, this would be a completely bullish, clearly bullish technical breakout, and as long as prices remain above, of course it is, but like the broad markets, my concern are these divergences. And for those of you who have followed the site, I talked a lot, and I continually talk a lot and put a lot of faith into divergences. They're not the be-all end-all, but typically your big moves, just like in the broad markets, they major trend reversals usually come with positive divergence on place, as we did at the end of the last bull market, and major tops typically come with negative divergences in place. As you can see, higher RSI was high here, went down. We can draw those divergences, but most of you have seen these charts on the broad markets that I've drawn. So that is the one cautionary note to this long side breakout. Obviously, a breakout to new multi-year highs is bullish, but with these divergences, we do see here the RSI divergences, although they still exist. If you take this line, this upper line now, put that up here, now you actually have a bearish rising wedge pattern, and you still have negative divergence there, up to the point where that ascending triangle broke out, and again, folks, this is a case of glass half full, half empty. Bulls will look at this as it was at the time, an ascending triangle had negative divergences, but those divergences were negated, or they are at least on the RSI. And again, if you want to look at the glass half empty, which I continue longer term at this point to do, only because the technicals clearly point at that to me with these multi-year divergences. But with that being said, let's go ahead and take quickly a look at the daily chart on this sector. There's your breakout. Again, this is the same upper trend line I had on that ascending triangle pattern. So as long as prices remain above this level, as you can see, they came in quite a bit recently, and at the very least I would expect, with those divergences and the run up that we've had, at the very least I would expect a back test of that pattern, meaning prices come back into that horizontal level, and if they move significantly much below that level, then we're probably going to see that that's proved to be a fake out or a false breakout. So let's drill down now into the individual components, and I'll start with Ruger. Ruger has been a trade on and off the site over the last year. We've had some very profitable trades on this one. If I'm not mistaken, we had at least one loser, stopped out once, but I think we had several more profitable trades, and overall Ruger's been a big winner, at least for me personally this year. Now we're looking at a weekly chart here of Ruger, and as you can see, like many stocks, I use trend lines. They're simple but very effective. And if you look at the uptrends, which I've worked on here, these uptrends usually end with trend line breaks. And we're looking at a weekly chart here, folks. This is a 10-year time span going all the way back to 2003. And you can see once we get those breaks of those weekly trend lines, that has marked the end of those uptrends and started a new downtrend or a bear market in the stock. And where we're at now, we're in the largest uptrend that Ruger has had in the last decade. So we're still trending up, and as long as this uptrend line, this primary weekly uptrend line, stays intact, the trend is bullish. However, these divergences, as I've noted here on Ruger, are significant, very steep divergences. If we look at the peak and the highs, prices making a higher high here, and the MACD and the RSI severely lagging. So this could be taken as a large wedge type pattern, wedging at the top, and a break below this trend line would more than likely begin a new bear market for Ruger. I have this sub-up trend line in here, which I believe was probably one of the short entries we had on the site last year. Can't recall exactly, but as you can see, when these uptrend line breaks, something else to look for is impulsive selling. If you look at the large, powerful red candlesticks on these trendline breaks, and it held back here as well. This one we had an impulsive breakdown. You can see the large candlesticks there, push back up to retest, and then the impulsive selling. So that's what we'd look for. For those of you in Ruger, I know it's been a popular stock lately. A lot of buzz about the firearms, possible restrictions, so everybody's going out and buying guns while they still can, for fear that the government may somehow put restrictions on those. So Ruger, Smith & Wesson, they've been beneficiaries of that. But personally, at this point, the stock has gone from a low of $4.03 back in late 2008 all the way to over $55. So we're talking, 5 years, not even, and a move from $4 to $55, extremely overbought, negative divergences. If I own the stock at this point, I would at the very least be very cautious and use trailing stops on that, or at least set a stop loss somewhere not too far below. And we'll take a look at the daily chart. Here's what I see looking at the daily. This is that longer term trend line. The white lines here, this was another trend line that was broken earlier, and you had sort of this wedge pattern. If you look at the bottom line versus the top one, prices were wedging up, broke down, retested, and so Ruger looks to me to be a stock in a topping process right now. This is just a possible pattern that I'm noticing. If I were long the stock right now, or if I were looking to go short Ruger for a long-term swing trade, which I will be, this would be my entry criteria here. We have a possible or potential head and shoulders pattern. Complex head and shoulders patterns usually they do have two shoulders. This would be your first left shoulder, second left shoulder, head, and we would be possibly putting in a first right shoulder. Again, very early in this pattern, we would need to see prices reverse fairly soon to keep that pattern symmetrical, and ideally on above average volume is what you want to see on a head and shoulders pattern. Just like we saw here on the coming off the head, you want to see accelerated volume on the right side of the head and the right shoulder when you see the move down. And just an FYI on head and shoulder patterns, you do not have to have two right shoulders just because you have two left shoulders. It is fairly common to see double shoulders on one side and not the other. So something to watch. And even if this isn't a head and shoulders pattern, this is horizontal support. So again, for those long who are bullish on the stock, that would be an objective stop level anywhere under this trend line. And for those looking to get short Ruger, that would be one level. And of course, your longer term sell signal would be a break of this weekly trend line. Okay, let's look at their partner in crime, no pun intended, Smith & Wesson Holding Corporation. Weekly chart we'll start out with. Again, trend lines are very simple but effective. This is a weekly chart, 10-year history. This was an uptrend line that broke at the last bull market. This was a downtrend line, a very clear downtrend line that triggered the beginning of this new bull that we're in now. So it's that simple, folks. If you're looking longer term weekly charts, you go short or exit your longs on these trend line breaks. We're talking multi-year trend lines, and you go long on downtrend line breaks. Where are we at today? Here are the lows back in 2011, and we have a nice 1, 2, 3 touches here on this trend line. So we have a break. We already on Smith & Wesson actually have a break and a retest, a back test of this trend line. Now, is it possible that prices continue to ride up along? We've seen a lot of that lately. We've seen a lot of long-term trend line breakdowns, or even on the daily time frames, and prices continue to retest for a while. And sometimes they do get back up above that trend line, and that would be bullish. But for now, we have a rising wedge pattern on the weekly chart. Strong divergences in place. If you look at the negative divergence here on the RSI, there's divergence on the MACD as well. I haven't drawn it, but you do see divergence, pretty much a flat to slightly down-sloping MACD versus a rise in the prices, higher highs in prices. So negative divergence, overall bearish-looking weekly chart. Time to tighten up your stops if you're long, or look for a possible short entry. Where would you short Smith & Wesson? Under this key support level here. That's at the 760-ish area. Maybe give it a little room. I should put another line here to the bottom of this gap back at this point in time, and this reaction low. So that's a support zone. So this would be your all in. Maybe you could put a starter position on a break of this line, but personally I'd rather wait and just wait till the stock got under this 735 level. But again, we've already broken this uptrend line here. We've seen some impulsive selling, and we're looking at a daily chart here. Just like the weekly chart, negative divergences in place. And these are different divergences. This is a shorter time frame, so that is a longer-term bearish-looking stock to me. And for those of you who are looking for longs, there are some bullish patterns I'll get to in a minute here. Just wanted to share my thoughts on what I see. Rockwell Collins, symbol COL. We have a long-term downtrend line here. Prices are pushing up. They have a little room to go before they hit this downtrend, but this is a key multi-year downtrend line going all the way back to the bull market highs in late 2007. So if you're long that stock, there's something to keep an eye on. Most likely the stock will encounter resistance and have a reaction, whether a pause or a pullback from that level. Obviously a break above it would be bullish. Right now we're riding up this uptrend line on the weekly chart, so as long as that uptrend line stays intact, that stock is in an uptrend. It is bullish. Getting a little bit overbought here on the weekly. Take a look at the daily chart. Actually, let's go to a 2-day period chart. This goes back to 2010. There's the downtrend line that I looked at. Now, what's a little more concerning, zoom back into a daily chart here, is Rockwell Collins is pushing up in a rising wedge pattern, a very pretty distinct pattern, and we're at this line here is horizontal resistance as shown by these previous reaction highs as well as some of these previous reaction lows back here. And so we're at both horizontal resistance and the top of this wedge with negative divergences in place. Price is making higher highs, and the MACD and the RSI are not. So that is one where personally, if I had ridden that stock up, I would be taking profits at this level, because I really doubt a breakout above this level is sustainable. Even if we got that breakout, we're getting close to the apex in this wedge, and it's a matter of time before this stock at the very least has a pullback. So shorts could be looking to enter on a break of this uptrend line, as would longs want to exit at that point. Okay, TASER. I'm trying to start out on the weekly charts here. TASER, this was a nice bullish breakout back in late 2011. I was tracking this one. Can't recall. I don't think I did put it on the site, and I missed the entry on this one. Had a breakout, a nice retest of that downtrend line. So that has been a bullish. That was a bullish event, and the stock has been very bullish since. However, at this point, like the other stocks I've looked at, I would be looking to either take profits or tighten up my stops if long. Again, these weekly charts are going back 10 years, and if we look at the RSI down below, let's take a look at every time the RSI gets overbought. Overbought is a reading over this red line, which is a 70 level, and typically your sell signal once a stock becomes overbought is when it comes back below that RSI level. And if you follow the vertical line up, as you can see, the corrections are substantial, very sharp corrections following these overbought readings. Usually leading to complete trend reversals. This was just a correction, you could call it, because prices did go a little higher, but this was a trend reversal. At this point, another trend reversal here, beginning a new bear market in the stock. This was a major correction. It was already in a bear trend. Prices had pushed back up, became overbought, and so as you can see, this is not rocket science, folks, and I'm of the opinion those who ignore history are doomed to repeat it. So anybody long TASER that doesn't tighten stops up, and you're looking at probably a 20-30% plus correction in this stock impending. That could happen. Start next week. It could start next month. It could start 2 months from now. But looking at history, odds are we're not going to go much higher in TASER before a nice pullback here. And as always, we use the daily charts to sort of zero in our timing. On the daily chart here, TASER, we have a large rising wedge pattern with pretty sharp negative divergences in place. This is the primary uptrend line, this one here, and we have this sub-uptrend line here. So a more aggressive trader might want to short on a break of this trend line, whereas a long may want to exit there, and definitely you wouldn't want to be long if this trend line goes. So that was TASER, FLIR, FLIR Systems. Again, jump back to a weekly chart. This was a very bullish pattern here. This is key support. Looking back again 10 years here on this chart, we have a reaction high, reaction low, so we have a nice horizontal support shelf here. If you look at the volume at histogram, look how the majority of trades have occurred up and above this level. The stock once again found some key support on this level here back in late July of 2012, with this nice bullish falling wedge pattern and positive divergences in place to boot. So we broke out of that pattern. Technically, the measurement, the pattern does have more to go. However, if you are long that stock right now or considering going long, you would need to wait until this trend line gets taken out. FLIR is at this pretty well-defined downtrend line on the daily chart, in addition to this horizontal resistance level I've marked here. So you have dual resistance right here and just above, and you look at the RSI, and the RSI on the daily chart is extremely overbought. So at the very least, I would be looking for a pullback in FLIR if I was going to go long. Maybe pull back to that 2240 area. That I would say the odds are pretty good that this gap right here is backfilled within the next month or so. It's hard to give exact timing on these things, but I think the upside right now before a pullback or consolidation, I believe, is very limited on that stock. ATK. Let's again start with the weekly chart. Okay, this one looks bullish all around to me. Here we have a very nice long-term downtrend line here, going all the way back to the high market highs in the 2007. Strong positive divergence, multi-year divergences in place. I wish I could see more of these charts lately, but I just don't. So we have a nice clean bullish breakout of that. The thorn in its side, like many other chart patterns right now, of course, is the fact how overbought the stock is. Usually, from my experience, when you see a large wedge like this and prices have come straight up from the bottom of that wedge, straight up to break out, more often than not, it is too overbought at that time to continue its run, and you'll see a pullback and a retest. So this is one to keep on your radar, folks, especially for those of you looking for some longs, long-term investment, or a long-term swing trade in 2013. I would be looking at ATK for a pullback to this level, or at least these overbought conditions to be reset. Let's take a look here at the daily chart real quick. And here is a downtrend line. We can see it a little bit more looking at this 2-day chart. So there's your downtrend line and horizontal support here to boot. So that stock could be a buy. It all depends on how the market's doing at the time, but you might want to look for a pullback to anywhere from the 61 level all the way down. The retest could come down here a little bit lower, but that would be an entry on ATK with a stop not too far below, alongside entry. TDY, Teledyne, and this one is another potential long. We're looking at the stock really actually just recently breaking out to new all-time highs. So that in itself is technically a bullish event. There's no way to spin that any other way. All-time highs are bullish. Now, again, like everything else, if you look down below, the stock has had significant divergences in place on this move up. And I could draw it here. We can draw that stock sort of wedging up in this wedge pattern with the RSI and MACD diverging. So not one that I would personally be chasing, but I wanted to put these ideas out there because I know my overall biases might sometimes keep me from going long or short. The trend is strong now, so for those of you who are looking for long ideas, here's your breakout. Recently broke out to new highs. Support called around 66. As long as the stock stays above that level, you're okay. I'd give it a little bit of room. Usually when stocks come back to retest new high, they're going to come back a little bit below that new high level. Whether that's intentionally to suck out a lot of the weak-handed longs, or to pull some more shorts in, I don't know. But I would set my stop somewhere under 65 if I were to take that stock now. But again, because of the longer term weekly divergences, I'm personally not interested in going long, so I won't add that as a trade idea to the site. But for those of you interested, you're more than welcome to it. HEIA. Let's see, this is a weekly chart here, a very nice looking ascending triangle pattern. Ascending triangles are inherently bullish patterns, and this is a stock consolidating and coiling, building up a lot of energy. Honestly, if I didn't see this MACD and RSI, these negative divergences below, I would be all over this pattern. And it could play out. Remember, folks, I talk a lot about divergences being negated. They're not the be-all, end-all when it comes to trading. It is something that I look at an inherently bullish pattern. If the oscillators and indicators down below don't confirm, I pass. That doesn't mean the stock isn't going to play out to be a great long side trade. It just means that it's not what I want to see. When in trading, I want to line up as many positive variables as I can on a trade for that trade to successfully work out, and I'm more than happy passing, but I wanted to point this out for anybody looking for a long entry. Let's take a look at the daily chart real quick. It's already had one false breakout to new highs here. As you can see, prices failed, and these are the bull traps that I'm talking about. However, it's powering back up again, so keep an eye on this level. 33.65. Now you have this previous reaction high to contend with as well. So I can't make a whole lot out of this daily chart. So again, this would be one for longer term swing traders or investors. And remember, the flip side of this is true when you look at these patterns. Just because an ascending triangle pattern is an inherently bullish pattern, they're actually very bearish when they break to the downside. So you have this long-term uptrend line going back to the bull market lows of early 2009, and a break below this pattern, especially with these negative divergences in place, would be a bearish sell signal. So for those long to exit, or for those wanting to short, that might be a nice swing short pattern. Okay, let's take a look. We're almost done here, folks. A couple more. Here's Honeywell. Honeywell, big component of the Dow, I believe. Well followed stock, and this is a textbook. If you look at, disregard this orange line for a minute here, look at the horizontal line. You had another ascending triangle pattern, nice beautiful breakout to new highs. So if you're taking the glass half full approach, clean bullish breakout to new highs, impulsive. Look at that big green impulsive candlestick most recently, clearing all the previous highs. However, personally, I'm not touching that stock. These divergences are clearly long-standing 2-year negative divergences in place. So if you do add this orange line up here that I have, prices making higher highs, you have a large rising wedge pattern with negative divergences, and that's why overall I remain for 2013, regardless of what happens here in January. I believe at least a substantial correction is coming soon. Whether or not that proves to be the beginning of a new bear market, that's yet to be seen. So here's Honeywell. For those of you long or looking to get long, you'll want to see Honeywell hold. If it comes back in, you'll need to see it hold somewhere above this 62. We'll call it the 62 level. Maybe a temporary break below there, but anything much below that, it means that breakout to new highs proved to be a bull trap. So for now, the stock is bullish. Price, it comes first and foremost, and the uptrend is intact. So Honeywell is one that those of you who are bullish might want to look at. GD, General Dynamics, another big company. Beautiful symmetrical triangle. We're at the very top of that. These symmetrical triangles can go either way, and all I can say to that is respect which either way it breaks. My trading style, even if I was bullish and wanted to go long the stock, I would not go long right with a stock being right at key resistance. You don't go long here, you go long on the other side on a breakout of this triangle. And like everything else, maybe it breaks out, comes back and retests. If you went long, your stop would be a little bit below your entry, because you'd have to enter on a breakout of the symmetrical triangle, and then you might want to allow for a retest. That's up to you. Some people always set their stops at or above entry. Again, everybody's different with that. So a pattern that I did want to point out, and we may be rejected here and prices may come back down, and then we might be looking at this as a possible short trade in a few weeks or a few months from now. Here's that same downtrend line. It's very clear on the daily chart. So for those of you that are interested in GD, either as a long or a short, an aggressive trader might want to put a short on right here. We're right at resistance and try to short a pullback. Maybe go for this gap fill right here, or hold it and see if the market corrects, and GD could be visiting the downside of that larger symmetrical triangle soon. So play it either way. HXL Corp, another very similar to the General Dynamics and a couple of the others that I've showed. Nice, we're looking again at the weekly chart here, a nice new breakout to new highs, bullish event. So there's another possible long for you folks. However, like just about everything else out there, these divergences are just too distinct, long-standing, divergences are on the RSI and MACD, and so I'm looking at this more with the glass half empty view, and that's a bearish rising wedge pattern with a breakout. Something I haven't mentioned here, folks. You can't see it below. Let me drag this up. How can I do that? Here we go. Volume. What you want to see on a bullish breakout of any pattern, you want to see volume above average volume, usually 150%, 1.5 times above average volume or more, and you don't see that on this recent breakout on HXL or many of the other stocks. So these breakouts to new highs are very suspect, and in my opinion, more than likely they will prove to be bull traps because of the lack of volume and convictions and the negative divergences in place. Okay, let's take a look at a daily chart on the HXL. And on the daily chart, again, another thorn in this stock side. As I mentioned, bullish, the fact that it has broken out to new highs. Bearish, the fact that there was you can't see it on this chart, virtually no, well, actually it was on below average volume. So the breakout to me is very suspect. Here's the RSI. Look at these overbought ratings again. Not rocket science if you follow the vertical lineup. Every time we hit these overbought ratings, look at the crosshairs. We've had corrections. Overbought here, drop below the 70 level, sharp correction. So again, honestly, not rocket science. A lot of bulls are going long these breakouts, and maybe they play out. But I personally, with a stock being this overbought, breaking out to new highs on extremely low volume, I'd be more apt to just keep an eye on it or short it here with a stop not too far above, because that's likely to fail. Okay, last stock. LLL, Triple L, or L3 Communications. Another nice symmetrical triangle pattern with a very long-term downtrend line. We're right at that resistance level. So again, maybe the market continues to firm up from a technical perspective and becomes more bullish over the next month or so. And if so, this is a great, long setup here. If not, if things go the other way, you have the downtrend line or the bottom of that pattern not too far below, and that stock might make a nice short. Don't see much down below. Let's take a look at the daily chart. And here's what we see here. I have this, what I believe to be a significant support, resistance level not far overhead. Call it the 79 level. But here on this daily chart, we're sort of wedging up. Negative divergences are in place. So I could easily see this stock continuing to creep up a little bit along this wedge. But more than likely, we need to pull back in this stock before it breaks out of that larger weekly triangle. And this is a great support level right here. So for those of you who are positioned long now, maybe want to get long, or those of you that might want to short it, I think this is an excellent support level right here. Multiple touches, and if we break this first trend line, that support level needs to hold. Otherwise, my guess, if we match that up with that weekly chart, it would probably break down from that weekly symmetrical triangle. So there is the defense and defense sector, a few of those holdings in there. I hope you all enjoyed the video. Thank you.